I think the Brexit vote is the biggest self-inflicted wound you could possibly imagine, really. And geopolitics have been a big event all around the world. I think the UK has been the epicenter of the circus that's going on. And so many outcomes that even 2 months ago looked like tail events are now looking more like base case. So a cliff edge, hard Brexit, a general election, a new referendum, all of those things seemed far-fetched a few months ago. I think the sum of those three are probably 50% or greater right now. So there's going to continue to be a lot of uncertainty. I don't think the macro backdrop is good for UK assets. Companies that have foreign revenues, the big cap companies, the oil companies, the healthcare companies, I think those should be fine. But companies that are facing a UK cyclical backdrop, that buy goods that are produced in other countries, if you have a weak sterling, that's a really terrible backdrop for those types of companies.
You know, a lot of our audience probably buys, broad European market ETFs. They probably don't own individual UK names. Is there any reason to invest anywhere in UK stocks right now, Patrick?
Well, yeah, the large cap, if you buy the FTSE 100, what you're at risk with is the banks. They make up a big part of the FTSE 100. But if you're buying the small cap companies, that's probably not what Americans are looking at. Those are the companies that are at real risk. So if you're buying the FTSE 100 x the banks, actually those are companies that'll probably weather a hard Brexit better than a lot of the other companies because of the multinational revenue streams. If you do get a weak sterling, that'll happen with a hard Brexit. The healthcare companies, the oil companies are going to get a benefit out of that. So if you can find large cap companies that aren't domiciled exclusively with UK revenues, I think those companies would weather a hard Brexit, and that's the real risk. The UK does go into a recession with a hard Brexit, we think, with a greater than 50% chance.
Well, let's look at the glass half full or half empty, depending, I guess, Patrick, what side of the Brexit equation you're on. What if we get a nice deal? Not a hard Brexit, kind of a soft deal, middle of the road, something everybody agrees on. I know that's not the consensus, but let's say we get that. What then?
Yeah. Well, that's still, it's not going to lead to a lot of certainty in the UK. So what you just described is a deal that'll start with a transition deal as we finalize the terms of that deal. So there's still going to be uncertainty for UK and companies. If you're looking at allocating hundreds of millions of dollars on capital expenditure, if you're a big multinational company, you're still going to err towards making that decision, I'm going to invest in Europe rather than the UK. So even if we get the deal, I think the UK is going to suffer the uncertainty risks that are going to defer capital expenditure decisions. You still don't know exactly how the outcome is going to go. The questions of a general election, a new referendum, all of those things aren't going to completely disappear, because if the deal gets agreed, it's not going to be a deal that everyone's happy with. There's going to be a very slim margin that it gets agreed by. And the UK, I think that uncertainty, when you're looking at an economy that's only growing about 1.4%, that uncertainty isn't something you want. You need something that's going to boost the growth towards potential. And I think the UK is going to suffer from that uncertainty headwind for years to come, even in a good news scenario.